Good day to you, and happy St. Patrick's Day. Welcome back to my ongoing series on the Flare Network, and by the way, you can call me Arthur Twiggs. In understanding the Flare Network 104, I study Flare Finance, a team of decentralized app developers not affiliated with the Flare Network or Ripple, but they call themselves Flare Finance, and have already developed 6 dApps for the Flare Network. In their own words, Flare Finance is a totally independent company of globally based developers building to bring an innovative change to the XRP, Stellar, Dogecoin, Litecoin, and Flare ecosystems. The team at Flare Finance seek to provide Spark users and therefore participating token holders with the fastest and cheapest DeFi experience. The superior architecture of Flare Network and the XRP ledger make this possible. Flare Finance reiterates that their user experience will be based on providing the simplest means possible to unlocking and utilizing the value carried in your Spark token, XRP, LTC, DOGE, or XLM. So, how does Flare Finance empower your crypto to earn more? That's the focus of today's show. Having said that, I am not a financial advisor. The content in my YouTube videos is for educational purposes only and merely cite my personal opinions. We are all in this journey together, attempting to understand Flare Finance today. What can Flare Finance do for us and the Flare Network? We'll find out when I return. Flare Finance creates decentralized applications for the Flare Network that are intended to bring more use purposes to Spark token holders, as well as the currently participating crypto holders of Dogecoin, Litecoin, Stellar, and XRP. And Flare Finance will go live immediately after the Flare Network launches by late May or June of this year. As we all discussed in my videos on the Flare Network 101, 102, and 103, decentralized finance, or DeFi, is a form of finance that does not rely on third parties such as banks, exchanges, or brokerages to offer traditional financial services. I might mention on a side note, if you have not seen my first 3 videos on the Flare Network, I would encourage you to do so. It will help you tremendously in your understanding of this video, Flare Finance 104. DeFi utilizes smart contracts on a blockchain. With DeFi, we do not have to give up our private keys in order to use financial services. Flare Finance creates decentralized applications, or dApps, for the Flare Network. We can think of dApps as like normal apps, but the key difference is that they are run on a decentralized network, such as a blockchain. Flare Finance says that their users' experiences will be based on providing the simplest means possible to unlocking and utilizing the value carried in your Spark token or participating tokens. The team at Flare Finance state that holders will soon be able to easily earn interest on their holdings on the Flare Network. So, Flare Finance is launching 6 dApps that will serve the Flare Network. What are the 6 dApps and what do they do? Let's talk about each one. Number 1 on the list is Flare X. It is a spot and margin trading platform with swaps. What does that mean? Flare X is a spot and margin trading platform with swaps is what it is. I'm going to have to break this down. Flare X is a decentralized application on the Flare Network. What is spot trading? What is margin trading? Spot trading is your normal buying and selling. You spend one currency and get another. Spot trading takes place in the spot market at the current price, otherwise known as the spot price. With spot trading, you are essentially executing a trade at the immediately available asking and bidding price that market participants are asking for. And because spot trading is done on the spot immediately, you must have the available assets to pay for your trade by the date of settlement. For example, if you are buying a $2,000 worth of XRP, you will need a $2,000 balance in your account by the settlement date. Now, let's talk about margin trading. It is not your normal buying and selling. Margin trading with cryptocurrency allows users to borrow money against their current funds to trade currency on margin on an exchange. In other words, with margin trading, you do not need to have the entire trade amount. For example, you put down $25 and leverage 4-to-1 to borrow $75 to buy $100 worth of Stellar. The only stipulation is, no matter what happens, you'll have to pay back the $75 plus fees. Or let's say you are looking to buy $2,000 of XRP. Since some trading platforms provide you with leverage of up to 100x on cryptos, you would only need $20 in your account to trade $2,000 of XRP. That sounds like a better deal, but let's briefly look at the advantages and the disadvantages. According to Capital, a publication platform for business, finance, and tech, spot trading helps you manage your risk. You can only trade the balance that you own. You will not end up losing more than what you already have in your account. The advantage of spot trading when managing risk can be a downside in itself in some situations. This is because you are only limited to the balance in your account, and you cannot take full advantage of good trading opportunities. Therefore, even if you have a trade that you have a strong conviction on, you can only make as much money as allowed by the capital you own. With only $2,000 there, there's only so much you can make with the $2,000. With margin trading, the biggest advantage is the opportunity to make big profits. You can trade as much as 100x your capital in crypto. With margin trading, a good trade at the right moment can yield you a lot of returns. There's a big risk involved in margin trading. As you can imagine, trading up to 100x on your capital makes it possible for you to lose more money than your initial investment. This is unlike spot trading, where you can only lose as much as the capital that you have. When trading on margin, your crypto may be liquidated, meaning you lose it if you do not have enough margin to support the losses on time. So, let's return to the stated use purpose of FlareX. FlareX is a spot and margin trading platform with swaps, so that sentence is clear now. According to the team at Flare Finance, FlareX enables users of the Flare network to swap currencies and earn passive income, providing liquidity to liquidity pools providing traders. A liquidity pool is essentially a pool of tokens that are locked by a smart contract. The main purpose of these liquidity pools is to help provide liquidity and facilitate trading on exchanges. So, FlareX is a spot and margin trading dApp, which means it allows holders to swap currencies and earn passive incomes. Now, on to number 2, the Flare Farm. Let's talk about Flare Farm. It is not like Farmville, Big Little Farmer, Blocky Farm, or Heyday, or any of the other farming mobile games. Nope, not at all. I was a little bit disappointed. I love farming games, but I just learned that Flare Farm could bring us real rewards, so I'm no longer disappointed. I'm excited. Flare Farm is a decentralized yield farming application. What is yield farming? According to Decrypt, at its core, yield farming is a process that allows cryptocurrency holders to lock up their holdings, which in turn provides them with rewards. Yield farming involves lending out cryptos through DeFi apps like Flare Farm in order to earn fixed or variable interest. The rewards can be far greater than traditional investments, but higher rewards bring higher risk, especially if the market is volatile. Now, on to number 3, Flare USD. Let's look at Flare USD. It enables the users of the Flare network to have an immediately available stablecoin currency. What is stablecoin currency? According to Investopedia.com, a stablecoin is a new class of cryptocurrency. Stablecoins are cryptocurrencies that attempt to peg their market value to some external reference. Stablecoins may be pegged to a currency like the US dollar or to a commodity price such as gold. Stablecoins have gained popularity as they try to offer the best of both worlds. This would be the instant processing and security and privacy of payments of cryptocurrencies, and the volatility, free stable valuations of fiat currencies, which are backed by governments. For example, the US dollar is a fiat currency backed by the United States government. Two primary reasons for the price stability of fiat currencies are the reserves that back them up and the timely market actions by the controlling authorities like central banks. Since fiat currencies are pegged to an underlying asset such as gold or forex reserves, which act as collateral, their valuations remain free from wild swings. The large majority of cryptocurrencies lack these key features. They don't have a reserve backing their valuations, and they don't have a central authority to control prices when required. Stablecoins attempt to bridge this gap between fiat currencies and cryptocurrencies. Flare USD can be minted and burned at any time by initiating an asset swap on Flare X. Flare USD maintains its valuable dollar-to-dollar peg at all times, since it is an asset backed one-for-one by Ethereum-based stable currencies. Flare USD can be used like any other stablecoin and will always maintain its asset backing. Holders of Flare USD can use their FUSD issue bonds, certificates of deposits, and other financial products with varying rewards based on ecosystem health and status. Now let's get on to number 4, which is Flare Loans. This is an asset-backed loan issuance platform which provides DODL, or decentralized on-demand liquidity, by enabling holders to pool or combine their assets to be loaned against a borrower's collateral. Decentralized on-demand liquidity, or DODL, is essentially just the process of buying and selling the cryptocurrency in originating and destination countries to create a source of liquidity on demand. The remittance company, like Western Union or a bank, is already holding the money in both countries. When someone wants to send money from the United States to Mexico, they can pay with cash in the United States, so the recipient can almost immediately pick up their pesos in Mexico. One of the problems with this system, which Flare Loans aims to address with DODL, is the way funds need to be locked up on both sides of the transfer. With Flare Loans, instead of locking money up on both sides of the transfer, the remittance company would basically buy XRP at one cryptocurrency exchange, then sell XRP for local currency in the destination country. So, Flare Loans will help users take advantage of collateralized loans and tap further into the industry of decentralized finance. What does it mean to collateralize a loan? According to Investopedia.com, to collateralize is the use of a valuable asset to secure a loan. If the borrower defaults on the loan, then the lender may seize the asset and sell it off for loss to collateralize your assets. Give lenders a sufficient level of reassurance against the risk of the defaulting on your loan. To collateralize a loan also helps some borrowers obtain loans if they have poor credit histories. Collateralized loans generally have a substantially lower interest rate than unsecured loans. The Flare loans ecosystem consists of creditors and debtors who make up the decentralized lending network. Creditors offer a variety of lending products to debtors, who in turn pay interest on their desired loan products to the creditors. Defaulting for longer than the loan term results in a full issuance of the debtor's collateral pool, creating an immediate 20% profit margin for creditors. All loans are fully asset-backed 120% and allow the ecosystem to run trust-free on contracts built on the Flare network. Number 5, Flare Mutual is a decentralized mutual fund that allows people to share risk together without the need for an insurance company. We already know what decentralized is. What is a mutual fund? According to our friends at Investopedia again, mutual funds pool money from the investing public and use that money to buy other securities, usually stocks and bonds. Flare Mutual will cover new developing projects on the Flare network and allow them to insure their risk against events like smart contract failure, hacks, and bugs that may affect a new ecosystem and thus providing peace of mind to their users. Holders are able to participate in mutual funds and can collectively back projects applying for insurance in either the pre- or post-launch phase, staking one's currency against the security of a project smart contract, providing cover to the project in the event of an issue. Now on to number 6, Flare Mine. It is a decentralized yield mining platform that allows holders of Bitcoin and Ethereum mining rigs to mine Spark. By mining, you can earn cryptocurrency without having to put down money for it. Flare Mine is a service for users who are mining Bitcoin and Ethereum with ASIC devices in a centralized mining pool. According to Investopedia.com, an application-specific integrated circuit, or ASIC miner, is a device that is designed for the sole purpose of mining, not coal, but rather digital currency. Miners receive Spark as a reward from completing blocks of verified transactions, which are added to the blockchain. Mining rewards are paid to the miner who discovers a solution to a complex hashing puzzle first. The probability that a miner will be the one to discover the solution is related to the portion of the total mining power on the network. However, on Flare Mine, miners are rewarded with Spark instead of receiving Bitcoin and Ethereum with automated trading bots. This also may serve to make good use of inactive ASIC devices that users have abandoned. Flare Mine will ultimately result in price support, upward price pressure, and a mineable Spark token for the Flare ecosystem. Now, let's recap. There are currently 6 dApps, or decentralized apps, on the Flare Finance network. These dApps are there to empower your Spark token to earn more rewards for you by utilizing the Flare network. The 6 dApps created by Flare Finance include Flare X for spot and margin trading, Flare Farm, which provides yield farming, Flare USD, which allows Spark holders to instantly available stable coin, Flare Loans allows for Spark holders to take advantage of asset-backed collateral loans. Flare Mutual will allow holders to share risk together without the need for an insurance company, and Flare Mine will provide a mineable Spark token, which will help in price support and upward price pressure, which means the number of Spark demanded is greater than the number of Spark available. These are merely the first 6 dApps created for the Flare network by Flare Finance and ready to launch in June 2021. Ultimately, there will be hundreds and quite possibly thousands of dApps on the Flare network created by the many decentralized application developers, which are on the rise. Please join me for my next show, when I will introduce a new series, the NFT Marketplace, or the Non-Fungible token marketplace. The NFT marketplace sounds much nicer and less like a mushroom. On the NFT Marketplace 101, we'll describe how creators and investors earn. Also, please look out for more shows on the Flare Network, as that series will continue as well. My mind just can't stop. I want to know the answers. Please tell your friends and family to join in, and be sure to subscribe. Hit the like button and the alarm button to be notified of future shows. Thank you so much for watching.